courtesy of Zero Hedge. We're just talking about Glencore, the big giant global mining company. It's pretty much going bankrupt. 90% loss since its highs in I think 2011 or so. Multi-billion dollar company. Credit defaults are going to be triggered on this one, which are basically insurance contracts against derivatives. But they say, forget Glencore. This is a real systemic risk among the commodities traders. Back in July, long before anyone was looking at Glencore or Asia's largest commodity trader, Noble Group, which we also warned last month was due for a major crash, precisely as happened overnight, which everyone is looking at now that its credit default swaps as trading points up front, and anyone who followed our suggestion last March to go long its then super cheap credit default swaps can take a few years off. We had a rhetorical question, and he asked back in July on Twitter, which will be first, Trafigura, Mercuria, or Glencore? Judging by what happened less than 2 months later, it appears that we have our answer. For now at least, Glencore, which is now flailing and which Bloomberg reports moments ago, is set to meet with its bond investors tomorrow, supposedly to allay their fears of an imminent insolvency, is firmly the answer to our rhetorical question. And yet something stinks. First, a quick look at Trafigura bonds reveals that the contagion from the Glencore commodity trader collapse, which nobody could possibly predict 2 months ago, and which has rapidly become the market's biggest black swan event, well, currently anyways, right? I'm sure it'll be outdone, has spread, and now we now have a new contender. And while Trafigura's equity is privately held, it does have publicly traded bonds, and they just cratered. So you can see the top chart, cratering, bottom chart, junk bond levels. Sending the yield soaring to junk bond levels. Wow. As discussed below, this may just be the beginning for the company, which, because it does not have publicly traded equity, but has publicly traded debt, has so far managed to slip under the radar. But who is Trafigura? Only the world's third largest private commodity trader after Vital and Glencore. From the company's own description, Trafigura is one of the world's leading independent commodity trading and logistics houses. We're at the heart of the global economy. Every day around the world, we are advancing trade reliably, efficiently, and responsibly. Oh, I'm sure. We see global trade as a positive force, and we go further to make trade work better. Better for who? So it says, more important than some pitch book boilerplate is the company's history. They were formed in 1993 by Claude Dauphin and Eric D. Turckheim when it split off from a group of companies managed by Mark Rich, aka the King of Oil, in 1993. So who is Mark Rich? Well, he's the founder of Glencore, of course, who, as a reminder, was indicted in 1983 on 65 criminal counts, including income tax evasion, wire fraud, racketeering, and trading with Iran during the oil embargo. Upon learning his prison sentence, maybe as long as 300 years, Rich promptly fled to Switzerland. He was so afraid of U.S. authorities, he even kidnapped his daughter's funeral in 1996. Or, excuse me, kidnapped. Let me try that again. He was so afraid of U.S. authorities, he even skipped his daughter's funeral in 1996. Mark Rich got a presidential pardon from Bill Clinton in a decision which was blessed by the kingpin of corruption, former department head, the former head, Department of Justice, Eric Holder. Clinton himself later expressed regret for issuing the pardon, saying that it wasn't worth the damage to my reputation. But he probably enjoyed that money that came with it, I'm sure. But back to Trafigura, whose summary financials reveal that the company, with $127.6 billion in revenues in 2014 and $39 billion in assets, is absolutely massive. In fact, in terms of turnover, it is virtually the same size as Glencore. But the most important and relevant numbers are on neither of the pretty annual report grabs above. They are highlighted in red in the excerpt from the company's interim report. The $6.2 billion in non-current debt and $15.6 billion in current debt, for a grand total of $21.9 billion in debt. Now this is less than Glencore's $31 billion. The implication being that Trafigura has a solid $6 billion equity cushion. Although judging by the bond plunge, the market is starting to seriously doubt this. But the problem is that Trafigura's EBITDA is lower, much lower. According to Cap IQ, Trafigura has had 1.8 billion in LTM EBITDA, suggesting a debt to that ratio, leverage ratio actually, of a whopping 12 times. If one wants to be generous and analyzes the company's disclosed 6 months EBITDA for the period ended in 3/31/2015 of 1.1 billion, then it grows to 2.2 billion. This lowers the debt to EBITDA for Trafigura to only 10 times. Indicatively, Glencore's own debt to EBITDA, and the reason for so much concerns about the company's solvency, is about half of Trafigura's. At least on the surface, it appears that Trafigura, which is as reliant on the ups and downs of commodity trading as Glencore, is far more levered and exposed to any commodity crush than the Swiss giant. But what really set off our alarm bells is that a quick skim through the company's annual report reveals something disturbing. A commissioned report titled "Too Big to Fail: Commodity Trading Firms and Systemic Risk," whose purpose was to explain why, as the title implies, commodity trading firms are not systemically important. The timing, just months before a historic rout for commodity traders, is odd to say the least. As a general take, anytime someone first brings up and then tries to talk down the impact of something being too big to fail, you should run. More seriously, there are two problems with this analysis, as even in the past week has shown. Commodity trading firms clearly carry a systemic risk. After all, one after another news outlet rushed to explain why yesterday's market plunge was the result of Glencore fears. It would have been the same with Trafigura's equity plunge if the company had publicly traded equity instead of just debt. The second problem is the subheader to the paper, which says, Trafigura commissioned a white paper this year on commodity trading firms and systemic risk. Its author, Craig Pirong, explains why he believes these firms are unlikely to have a destabilizing effect on the global economy. Oh, really? The paper's conclusion: commodity trading firms are not a source of systemic risk. And then he says, oops, guess they are. Who is Craig Pirong? As the New York Times explained in 2013 in an article titled "Academics Who Defend Wall Street Reap Reward," Pirong, a University of Houston professor, is just a member of that all too pervasive paid expert for hire group, academics, without actual credibility inside their own circles, and who as a result will opine on anything and everything, usually involving Wall Street regulatory and risk matters, just to get paid. I'll say anything positive for you boys as long as I get paid. That's essentially what he's saying. This is precisely what Trafigura did when it commissioned him to explain why Trafigura is not systemic. Ironically, it did so in August, just as all hell was about to break loose for the commodity traders, especially the most systemic ones, like them. And while the market has shown how the paid opinions of such experts for hire should be completely ignored, the question remains, just what was Trafigura so concerned about when it commissioned a compensated study meant to goal-seek the company's explicit conclusion that it is not systemic when it obviously is? Opinions aside, at the end of the market will decide just who is systemic and who isn't. One look at the price of their bonds above has given us the answer. It is a move comparable to what happened to Lehman Brothers bonds, if not equity, the day after the bankruptcy filing. Except these guys haven't filed for bankruptcy yet. Clearly, the Lehman bonds could not believe what just happened until it was too late. For Glencore and increasingly Trafigura, the bond price is finally signaling the realization that, yes, this indeed is happening. Oops. He says we'll save our discussion for Mercuria, which is the other trading company, commodities trading company, for another day. So I find this interesting, very interesting, simply because we had our little blood moon thing just go by. We had these important dates, right? 9/23, 24. Nothing seemed to have happened. Pope came, gave his New World Order speech, talked about all the countries needing to open the doors to the refugees. All these countries, you need to let them in. Nobody seemed to ask the Pope, you belong to a country called the Vatican City, right? Yes, you are actually a country, correct? Yes, we are. How many? Not that you're a huge country at all, of course. But how many of these people did you let in? None. Are you flying around in a massive polluting jet? Yes, he is. But when I got off, I got in a Fiat 500. Okay, and what about the motorcade that went with you? Well, you know, I got to bring my crew, my boys. You know, it's kind of like he's a rock star or rap star. You know, I got to bring my crew. Hypocritical New World Order Pope. Having said that, which isn't even related necessarily to this, the fourth and final blood moon has occurred. Lindsey Williams said September, October timeframe, the party should be getting started. In his last video, he said, you know, September to the end of the year. Does it really matter whether it's September to October or September to December? No, it doesn't. The party has already started. Dow Jones over 18,000 is now below 16,000, so it's tapping into the 15,000 range. You know, so that's, you know, again, just barely, so let's just call it 16,000 flat. I don't know exactly what the high was in the 18s, but it's around 2,000, 2,500 points. It's a pretty large loss considering that was not that long ago. The party has absolutely started like Lindsey Williams said it would. And now we have Glencore collapsing. We're going to have this other one, Trafigura, collapsing. They're finished. And these are allegedly commodities trading giants, along with the fact that they mine and have resources across the world for that. As the first article said, I read about Glencore said, they hedge against future production and whatnot. So they go out and buy these futures contracts to do the hedging. So you have to wonder, though, here's something to think about. How many futures contracts does Glencore have that are open currently? That are on, that haven't been closed, so open positions. And how many does this Trafigura have? And Mercury, or whatever the other one was? And any other smaller ones that aren't the top three like those guys? How many open contracts do they have? And what happens with those open contracts? Should they say, oh, we're filing for bankruptcy today? They don't just keep them open. They're going to have to close those positions, aren't they? If there's a considerable amount of these positions or futures contracts that all of these guys are holding, and they have to sell a bunch of them, I'm just going to throw this out there. Are we going to see commodities prices take another huge plunge? Because if you have Glencore and this other company rushing to the exits to get rid of any and all things that they own to bring in any kind of income, you could essentially cause what I like to refer as a stampede to the exit doors of any of these positions that they have that are open. So naturally, with the Lehman collapse, they were holding a huge short silver position, which caused the price of silver to get absolutely destroyed when they went under. Now that could have been by design, by the club, there's no telling. But it did happen, and we could see something similar happen with these giants. However, Lehman Brothers was a banking institution, financial institution, who was sitting on that massive short position. I don't know that these commodities houses, or these two we just mentioned, or I just mentioned, not we. Who's we? It's just me in here. We don't know the size of the contract, the number of contracts that they have outstanding. And they may have already started selling those recently in preparation for what's happening right now. Again, no telling. Can't figure that one out yet. But I'm going to say a lot of us are going to hope that they don't have a lot of those contracts outstanding, if any. Because if the markets are going down because of fears of Glencore, which is going to turn into the next black swan, because fears of this other company, Trafigura, and then it'll turn into the other one, Mercuria. You have Black Swan 1, Black Swan 2, Black Swan 3. Of course, Wall Street's going to blame it on these commodities trading houses, as well as the fact that they're global mining companies. But it's interesting to see that just a day or two later, that's all. And another big company with the same situation is actually appears to be maybe even worse than the first one. And the first one's having its little dreaded meeting with the bondholders. Look, guys, you're finished. I hate to have this board meeting here with you guys present, but listen, about those bonds you thought you owned, that you thought you were earning interest on for a little while. That's gonna be painful. By the way, any of you guys listen to an older man named Lindsey Williams? No? Well, you should have been. Why is that? Well, because he said a long time ago, a few years ago even, that what was going to be coming right now, that's here right now, which is the reason why you are in this board meeting with us. He said, if you have anything that's written on a piece of paper, it's not going to be worth the paper it's written on when the stock markets start letting loose and the economies of the world start going down. Oh, that's funny. That's kind of happening right now, isn't it? Well, yeah, exactly. So, had you guys listened to Lindsey, you'd have been safe right now. This old man in his 70s claims to know an oil or two executive retired that tells them what's going to happen in the world because they're the ones causing it, appears to have been right, appears to have been spot on with what he was saying. as he usually is. Could you imagine that? Matt, if I was the CEO of that company, I would have that conversation. Listen, guys, we appreciate you buying our bonds, because without it, we wouldn't operate the way we would. We wouldn't have been able to leverage all this crap, which makes it that much more devastating. But if you'd been listening to Lindsey Williams, you would have never bought into our company, or bought these bonds anyways, or our stocks, shares. Another revenue stream for us, so we appreciate that, because we wouldn't be able to function the way we would have without you doing that. But to be honest with you, I wish you would have listened to guys like Lindsey Williams, or this bozo on YouTube named James J. Step 4 has been screaming about this stuff for years, who doesn't have any kind of financial background, didn't go to college. I'm not one of these paid experts like this moron who was just paid to say there's no systemic risk. And I'm almost certain he makes a tiny bit more money than me, I'm sure. But it ain't cheap lying for the club. When you gotta lie for the club, you gotta get paid. So we're gonna find out that any and all of these big boys, like Glencore and this other one and the third one they're gonna talk about soon, because you know it's next, they're crumbling and collapsing. It has happened. We just got past the blood moon, 23rd, 24th, the one another happened. This just happened literally 2 days ago. And today is the 30th, right? Is that correct, old snippety? September 30th. We're still not, just days later. Blood moon, September 27th, 28th, and here we are, wake up to this. First 2-3 days of this particular week, that was, the final blood moon, oh my God. And we just had 2 black swan events that are absolutely being dealt with in the market right now. It's being felt through the market. The first one first, Glencore. Now we're dealing with this other one, Trafigura. And again, these guys are leveraged massively. You know there's derivatives attached to these guys. You know those derivatives are going to be exploding, so to speak. And there's going to be credit default swaps, or what they call insurance, but they don't want to call it insurance, because if it's insurance, they have to be regulated such as insurance would. So they didn't ever like that from the beginning, so they renamed them to credit default swaps instead of insurance, even though they act as insurance. And that is that shocking to find that out? No. How many credit default swaps are being triggered? So what is the collateral damage going on behind the scenes for these 2 behemoth companies? I think we fixing to find out. Keep your eyes and ears peeled. These little events, which you may think are big events, these are little events compared to probably, I'm going to say, what's about to be coming with other big institutions. And I'm not talking these little mining and trading commodities companies. I'm talking some of the big boys, right? The Deutsche Banks and those kind of guys. All we can do is wait and see and get some popcorn, because the movie's about to start. Matter of fact, the previews have just started. Take care.